Hello traders, Gary Wagner with the gold forecast today. It is approximately 9:30 here in Honolulu, Hawaii. It is Wednesday, November the 11th, and this is the daily report. Before I get started today, I did want to mention I have sent out a survey and I've started to get some of the responses back to make the gold forecast the best possible newsletter for you. And for you means something different than all of my subscribers. It's very, very important that you spend a couple of moments and answer the questions because it's revealing a lot of information on changes that will be forthcoming that I didn't even consider to make this the best newsletter I can. One of the ideas that I hadn't even considered is that the videos are not iPod compatible. I absolutely have the ability to send out these tapes and videos so that they are iPod compatible. I just need to know what percentage of my subscriber base really needs that to be part of the process. So I thank you very much. Please go ahead and fill those out. Traders, gold is trading higher this morning, trading roughly at 1406. I think that the interesting story right now is how it's trading up $2-3. That's due to predominant buying. That's accounting for about $12 out of the move, with the strengthening dollar contributing a negative $9 to the price. So although we see gold up only a little bit, $2 or $3, it's really up $12. When you take into account a strengthening US dollar, that takes up much of the gain. Of course, the one thing that we do want to look at is different areas that we have to take out, and I like to use this one particular chart in which I've got my Fibonacci retracement. Will kind of blow that up for us here. And I think that what we can see is that we have this one band, I'll call it a band of congestion, but this 1226, as you can see, that's the 76% move on wave 4 as it related to wave 3, and this 1422 right in here. These two match up pretty well, and I think that's what's giving us this upside resistance right in this area, right around the 1420. Now, of course, if and when we take that out, my anticipation right now is still that the market has the opportunity to go, as I said, I believe 1488 before a correction. And what I mean by that is, for those of you that study straight Elliott, excuse me, and what I mean by that is, for those of you that study straight Elliott wave theory, realize that even a bull market is going to have periods of contraction or correction and periods of expansion or acceleration in terms of the price. And I think that as we get closer towards Christmas, the end of the year, I think that this is probably going to be that last hurrah, that last rally of the year before we go into a short corrective period and then move back into a bull cycle. My sentiment long term is I am looking for $1,500 gold. I'm also looking for $1,600 gold. I actually believe in $2,000 gold. Now, I wrote an article for Stocks and Commodities, this is back in February, in which I did state that I thought the market was going to 1,500 and then to 2,000. I did believe at that point that 1,500 was still 2 years away. I was off by a year. I don't mind being off when I'm a gold bull. That's great. 2,000, that's way down the road. But 1,500, I believe we'll see 1,500 probably first quarter. And there are people out there right now that are absolutely calling for 1,600 on the first quarter. Obviously, let's maintain our long positions. We're going to maintain our stops just where they are. This has been Gary Wagner, wishing you, as always, good trading, and we'll talk to you tomorrow for the daily review. Again, traders, please go ahead and fill out those surveys. That survey will help you get the items that you find most important that might not be covered, and allow me to spend less time on things that you don't find as valuable. I simply need to know what my subscriber base is looking for so I can exceed the wants and desires of this newsletter. Bye-bye.